welcome back to Stock Talk with your girl,
back.
Dr. E and David.
Hey.
We are here and excited to talk about last week. Oh my gosh.
Man, yes, we are. So we're going to get into the tariffs, the 100% tariffs that Trump did on China, how it affected your portfolio, because we all seen the market go down on Friday. We're going to talk about the bounce back. We're still going to mention the government shutdown and how it's affecting your portfolio.
Exactly. And yes, it will definitely bounce back. Once you look at the charts, you'll be able to see that it actually fell into some really good support areas.
Oh, yeah.
Where we can definitely take advantage of this next upcoming week in the stock market.
Yeah, and then like we always say, whatever goes up, whatever goes down has to go up. Whatever goes up has to come down. So you already know it came down to spots, levels, so it's going to go up. It's just when and where. It's always when and where. Position yourself right so you can make money.
Right. And Jerome Powell already said a couple weeks ago that, hey, it seems like everything's pretty high right now. So you can really tell that all the overinflated stocks that was definitely way over their head. They fell the hardest during the crash that happened on Friday.
And then in most of the other videos that we did mention that the gaps will fill. Just be mindful. And if you was following us, you see that the gaps did fill in some of these stocks.
Oh,
so,
immediately.
Yeah, so well, if it was going, of course, if it was going down, it filled. It wasn't. Yeah, it filled. It wasn't no ifs, ands, or buts. That thing filled.
Yeah, I had so many alerts pop up on my phone.
Yeah.
Like, bing, bing, bing. Everything was hitting all my lines.
Yeah.
So yes,
all of the
please make sure you guys know that we are not financial advisors.
No.
This is not financial advice.
Not at all.
This is just us talking to you about how we trade. And please know that all trades have risk. And this is not recommendations to sell or hold or to buy.
Nope.
So let's go ahead and get into these charts.
All right.
407, which happened on the 9th. So once it opened up on Friday and it went to 673.95, since it did not surpass it, it decided to go ahead and go down. Once it did go down, it surpassed and went to a very good buy zone. It hit right on top of right above 650. That's a very good buy zone, just around that zone right there. And it hit those same areas that it actually always hits. So as you can see, normally it will hit here and go up. So it hit 652. The last time it was here, it went to 667, and then it came back down to 664, and then it went all the way up to 673. So as you can see, it did it again. It may try to go ahead and do it again and go back up another couple of dollars. But as you can see, it is right where the Bollinger Bands are ending. And then also it is technically following a trend line on the daily chart, going from May all the way till now, September. So we will see if it actually breaks that trend line, and then also breaks that resistance that it has from early September.
It's still trending upwards. So if you follow, it might have took a big fall on Friday, but if you follow that trend line, it's still trending in the upward position.
Exactly.
So it's going to correct itself and turn back around, which means more chances for you to get money. Get in and get money. So you follow that trend line, just like Dr. E said, watch the magic.
Yes, definitely watch the magic. But if it hasn't broke, don't try to jump in there and say, hell, I think it's going to go down even more. Yeah. Until it breaks the trend line and until it breaks through that resistance, I would not, encourage to try to put another put. It's definitely a good idea right now to buy the other way, and then also to see if it actually breaks. Now what used to be the highs is now resistance. So let's see if it's going to break past the 666, 669 area. and then all the way to 673. So once it does turn around, let's see how it actually reacts to the chart.
And this is a good time to start putting in your lines.
Yes,
So,
exactly. So you get your alerts.
Right, your alerts. So to tell you what's going on and you're not caught blindsided.
Exactly. Because a lot of times, like I like to chart off the daily and the 4 hour, so it takes a long time to actually get to that support area that I put inside there. But also I know that, hey, it's an amazing support area because last time I was here, it flew up tremendously. Or last time I was there, it flew down tremendously. So just making sure that you're going above and beyond and really picking good areas that, without a shadow of a doubt, is going to react in the way that you want it to. So, and then also, of course, if the SPY is in a good place for it to turn around and go back up based on the chart, then you got to know, their reflection of the rest of the stock market. So you got to just, be aware that, hey, if the SPY is going to go up, then most likely so are other charts. Let's take a look. QQQ. Then also you have to look at the RSI. That's also low. So it's in a very low buy zone. It's right near the 30. But looking at the trend line for QQQ, you'll be able to see that, hey, it's hitting a really good area. It's not quite fully there. It probably could drop maybe another $1, maybe. But definitely it's on its way back, going the opposite direction. So don't try to pay that little dollar. It's not worth it. You got to think of your reward that you're going to get. Do you really want to risk, your money for a couple dollars, or do you want to risk your money for a substantial amount of money? So you got to think about that. You got to also think about, hey, if it's hitting the trend line, then also what else is happening. And as you can see, it's also hitting the great resistance areas right there. So right around 583, 584, it hit that area. So you just gotta be cautious and just be alert on what you're buying into, what happened, and how did it react last time it was there.
Always.
And then when it does decide to turn around and decide to go up, which is always something that we are definitely hoping for, a big run the opposite direction, then where is it going to stop at? So of course the last highs are now resistance areas, and it will probably go to more like 602, between 602 and 607. And then if it actually gets past there, it's going to try to attempt that high again of 613.18. So just be very attentive and very aware of what's going on within the market, and just always be ready. Have your alerts ready. Have your trend lines ready.
Always.
And look at every single chart. Like, is the daily, is it talking to the 4 hour? Is the 4 hour talking to the weekly? Like, can you see them in conversations?
Yeah.
You know what I mean? Like, is it talking to you? Don't be looking at one chart and be like, oh, it's about to know.
Yeah, don't force the conversation.
Don't force the conversation. Like, it's about it's not.
No.
It's not risk your coins. So definitely try to make sure that you have all alerts and indicators in place to ensure your success. And of course, as you can see on a lot of other charts, it's outside or about to be outside of a lot of the Bollinger Bands, which of course is my favorite, which is our favorite. So please take those in consideration as well.
Yes.
Yes. So please take those under consideration as well. Please make sure you are trading carefully.
Yes.
Do not over leverage your account. Just because I said, hey, it may go up and that it may go up next time an extra, $15, $20 does not mean that you take every last coin you have and jump into the trade. Like, sometimes it's just really good to sit on the sidelines and just really watch. Like, okay, how is this stock actually reacting to, reacting to the charts? Right. How volatile is it? And then also just make sure you're just cutting down your funds, saying, hey, I only want to spend 10% on this trade. Only want to spend, 5%.
Yeah.
But don't go inside of a trade with 80% of your money. Because you have no idea what somebody else is going to announce.
You need that fight back money. Yeah, you need that fight back money.
Yes.
If something goes wrong, you need money to play the other side or whatever. Even if another stock takes off, it's not about another side. You see your alert goes off and you need to get in this stock too, as well as the one that you're in. Because you see it taking off, you need money to do that. So you don't want to over leverage your account. Never.
Yeah, exactly. Yeah, exactly. I don't know how many times before I'm like, oh, I know this is going to be right. Let me hurry up and jump in. Matter of fact, I'm buying, 100 contracts. I'm buying what if the trade doesn't fully go your way?
Right.
You don't want to over leverage your account. You got to diversify.
Yeah.
I have so many alerts in my phone that as soon as one pop off, it's like, oh my gosh, it's Christmas. I got to press it. Let me go ahead and buy in and leverage, that trade as well. Because let's say if you have an 80% win rate, you don't want to pit, or 90% or whatever it is, you don't want to, what happens if that trade you just took and you put all your money in, is that 10% that you lose? Then you have no money to live for tomorrow.
Right.
So you definitely have to make sure that you are doing your due diligence and diversifying your account, only put a little bit inside of the market, and just working it from there and just working your way up slowly.
Right.
The tortoise always wins the race.
Don't let the market show you what it's going to do. Don't force anything. Read your chart. Let it show you first, then make your decisions. Let it, like they say, give it that 15 minutes, 20 minutes before the market, when the market opens, to jump in there and act like you want to do. Let the market do its thing first. Let the market do its thing. It'll talk to you.
And if you had bad anxiety, if you seen those bars and they're flying, put the phone down.
Right.
Just put it down, because it's going to have you make a bad decision, okay?
Or
hit it down and then wait for your alerts to tell you that, hey, it hit your area, before you try to jump the gun and it's not time for you to actually jump into a trade.
Or it might just be time for you to sit back and watch the market.
Yeah.
Just see what it's going to do. You don't have to invest in it, just watch it.
Exactly.
Pick a stock and see how it moves, see what it does, see what levels it touched. So then you know, okay, it touched this level, that level. Because sometimes it's good to watch the market and the level it touched when you're not invested in anything, because then you can see it clear. When you're invested, it kind of messes up with your analysis of things.
Especially, I'm sorry.
No, go ahead.
I was going to say, especially if you're a new trader.
Yeah, yeah, definitely.
If you're a new trader, or actually just anybody, like if you're looking at a new company, like you need to put that company on a probationary period, just like you would at a job. Like you're the boss. You need to look at the stock for the next 90 days and be like, is it something I really want to jump into? Is it too volatile? Is it too this? Is it too that? Do you like the way that it moves? You need to go ahead and really analyze the stock before you jump into it. Mm-hmm. But regardless, we wish you guys absolutely the best.
Yes.
Please make sure you make sure you subscribe. Make sure you get the stock journal if you like.
Link
if you
is
don't
at the bottom.
One. And then also, please make sure you join our StockTalk community, where you can join like-minded traders just like yourself. But until next time, we appreciate you guys clicking on. Bye.
Keep trading.
Hey, you guys. We really hope you enjoyed that last episode.
And if you're really ready to keep transforming, go ahead and jump into that next lab episode. The one right here. Down here. The link right here.
It's probably over here.
Or there. Or here. Link. Click. Go ahead. You got it.